Welcome to Charged Alpha. I'm Hudson, joined by Lana. Today's chapter, Pinterest, the visual discovery platform that quietly became one of the internet's most valuable shopping destinations.
Pinterest was founded in 2009 by Ben Silbermann, Paul Sciarra, and Evan Sharp in San Francisco. The core idea, a digital pinboard where people collect images of things they love and aspire to own.
Early growth was organic. Wedding planners, home decorators, and food bloggers discovered that Pinterest organized visual inspiration in a way nothing else did. It became the fastest site to reach 10 million monthly users.
Pinterest went public in April 2019. The stock surged during the pandemic as homebound users flooded the platform, then fell sharply as attention shifted to short-form video competitors.
Bill Reddy joined as CEO in June 2022, arriving from Google where he led commerce. His mandate was explicit: turn Pinterest's shopping intent into a measurable revenue engine.
The pivot worked. Pinterest crossed $1 billion in a single quarter for the first time in Q1 2026, revenue up nearly 18% year over year.
The business model is advertising-driven, but the Pinterest user is different. Over 96% of searches are unbranded. Users arrive with category intent, not a specific brand in mind.
That places Pinterest in a uniquely attractive slot. Brands reach consumers in a discovery mindset, closer to purchase than awareness, but earlier than a search ad.
Gross margin stands at 79%, reflecting a software-heavy cost structure. The platform hosts 500 million monthly active users, with more than 80% outside the United States.
The U.S. to international monetization gap is large. U.S. average revenue per user runs roughly $30 per year, while international is a fraction of that. That gap is also the opportunity.
Pinterest has built lower funnel ad products through partnerships with Amazon and Instacart, giving advertisers direct shoppable links with measurable return on ad spend.
AI is driving the next wave. Pinterest's recommendation engine personalizes visual feeds at a granularity that meaningfully increases the move from inspiration to purchase.
GAAP operating margin remains negative, but free cash flow tells a cleaner story. $312 million over the trailing 12 months, a 31% FCF margin.
The balance sheet is unusually clean. Pinterest carries no long-term debt and holds $384 million in cash, optionality without a leverage overhang.
The competitive radar shows Pinterest's sharpest edge is commerce intent, a shopping mindset that neither Snap nor most social platforms can replicate.
The relative weakness is ad monetization efficiency. Pinterest is still closing the gap to Meta and Google on direct response ROI. Shoppable infrastructure is the bridge.
Reddy came to Pinterest with elite commerce credentials, building Google Shopping into a multi-hundred billion-dollar channel and modernizing PayPal's merchant platform before that.
That background is showing up in results. 4 consecutive quarters of accelerating revenue growth, a first billion-dollar quarter, and a partnership ecosystem closing the gap between aspiration and transaction.
That's the company chapter for Pinterest, built on visual discovery, now building commerce infrastructure for 500 million monthly planners. This is Charged Alpha.
Pinterest crossed $1 billion in a quarter by turning inspiration into commerce. Let's see whether the ad model can close the profitability gap.
Pinterest just crossed $1 billion in quarterly revenue for the first time in company history. 17.8% year-over-year growth, 79% gross margins, and a price to sales of 2.9 times. The market has been underpricing this one for a while. 500 million monthly active users, a real commerce pivot underway, and the CEO who built Google Shopping running the show. I am Hudson, and this is Charged Alpha.
Pinterest is a visual discovery and inspiration platform with 500 million monthly active users globally. More than 80% of those users are located outside the United States. People come to Pinterest to plan weddings, home renovations, fashion choices, travel. The pivot currently underway is converting that planning intent into commerce through lower funnel shoppable advertising products that let brands close the loop between inspiration and purchase directly on or near the platform.
CEO Bill Reddy came directly from Google Commerce and before that ran PayPal. The board hired him with a specific mandate: turned Pinterest's enormous pool of purchase intent data into a performance advertising engine. Amazon and Instacart are now direct advertising partners, which means Pinterest is no longer purely a brand awareness buy. It is starting to function as a commerce performance channel, which is where advertising budget concentrates.
Q1 2026 revenue came in at $1,007.5 million, up 17.8% year over year. This is the first time Pinterest has crossed $1 billion in a single quarter. The quarterly sequence: Q1 2025 was $855 million, Q2 $998 million, Q3 $1.049 billion, Q4 $1.319 billion, Q1 2026 $1.007 billion. Q4 is always the seasonal peak. Holding above $1 billion in Q1 is the milestone.
EPS was negative 12 cents GAAP, beating the negative 15-cent estimate. Pinterest is not GAAP profitable. That matters. But the income statement and the cash flow statement tell meaningfully different stories, and understanding that gap is essential to evaluating this business fairly.
Trailing 12-month free cash flow is $311.7 million, a 30.9% FCF margin. 79% gross margins at the top, 31% FCF margins at the bottom. The GAAP loss is driven primarily by stock-based compensation and depreciation, not by operating cash burn. The cash generation is real and it is growing.
GAAP operating margin is negative 8%. That gap between 79% gross margin and negative 8% operating margin reflects heavy R&D and G&A investment. The bull question is whether those investments build durable advantage in AI recommendations and commerce infrastructure. The bear question is whether they are simply running in place against Meta and TikTok.
Balance sheet: $384.1 million in cash, 0 net debt, 4,778 employees. Market cap $12.8 billion. Price to sales 2.9 times. For a platform with 79% gross margins growing 18%, that PS is a material discount to every meaningful software peer in the social and commerce advertising space.
The ARPU gap is the core growth engine. US ARPU is substantially higher than international ARPU, and 80% of users are international. As lower funnel shoppable ad products scale globally and Amazon and Instacart partnerships deepen, that gap begins to close. On 500 million monthly active users, even modest international ARPU improvement compounds into large revenue numbers.
Analyst consensus is hold, not buy. The average 12-month price target is $28. The stock is trading around $21. That is a 33% gap between where the stock trades and where analysts think it belongs. Hold rated with 33% upside is a meaningful tension that reflects uncertainty about execution timing rather than doubt about the ultimate destination.
The hold rating reflects the gap profitability timeline uncertainty. Analysts believe Pinterest is worth more than $21, hence the $28 target, but they are not confident enough in the pace of the commerce pivot execution to commit to a buy recommendation. The thesis is correct in their view. The timing is what is unresolved.
The primary bull argument from the analyst community is straightforward valuation math. 2.9 times PS with 79% gross margins and 18% revenue growth is cheap relative to every meaningful comparison. Meta trades at roughly 9.7 times PS. Snap trades at 3.1 times PS with lower gross margins and lower revenue growth. Pinterest is the value trade in social advertising right now.
The primary concern among cautious analysts is competition for social commerce advertising budgets. Meta and TikTok both have dramatically higher US daily active user counts, more sophisticated ad targeting infrastructure, and established commerce advertising products. When brand advertisers allocate social commerce budgets, Pinterest is often not the first call. Being the third or fourth choice in budget allocation is a structural headwind.
US MAU saturation is the second key concern. Pinterest's domestic user base is effectively flat. The growth story requires international monetization, and international ARPU remains a fraction of domestic ARPU. Closing that gap requires building ad market infrastructure in regions where digital commerce ecosystems are less mature. and that is a multi-year execution challenge that analysts are not fully willing to underwrite at current prices.
The bull case is the valuation math combined with the commerce inflection. You are buying a platform with $1 billion in quarterly revenue, 79% gross margins, 31% FCF margins, zero net debt, and 17+% growth at 2.9 times sales. That multiple implies a lot of failure that is not in the actual financial results.
The commerce pivot has real proof points. Amazon and Instacart partnerships mean advertisers can run lower funnel performance campaigns on Pinterest, where attribution is measurable. That shifts Pinterest from a soft brand awareness channel to a hard performance advertising channel. Performance budgets are larger, stickier, and grow faster than brand awareness budgets. This is the pivot that could accelerate the ARPU gap closure.
Bill Reddy is the right operator for this moment. He built Google's commerce advertising business and ran PayPal. If any executive can close the gap between Pinterest's purchase intent data and its current revenue per user, it is him. Right CEO, right product, structurally undervalued.
The bear case starts with gap profitability. Pinterest has been public since 2019 and is still reporting gap losses. Sustainable gap earnings require revenue acceleration or cost discipline or both. The company has not yet delivered those outcomes consistently enough to satisfy the market.
Meta and TikTok are formidable competitive risks. Both platforms have similar demographics, dramatically higher engagement, and more sophisticated performance advertising infrastructure. When brands allocate social commerce budgets, Pinterest is competing against companies with far greater engineering resources and data scale. That is a genuinely hard competition.
The US MAU ceiling is real. Pinterest has essentially saturated its core American user base. Every incremental US ARPU gain must offset the drag from a flat user count. International is the escape valve, but monetizing users in less mature digital ad markets requires years of infrastructure investment before revenue materializes.
CEO Bill Reddy selling shares under a 10b5-1 plan is worth noting. Pre-scheduled programmatic sales are not necessarily bearish, but there are no open market purchases from executives or directors at current prices. Nobody is buying stock voluntarily at $21. Not a red flag, but a meaningful absence of a green one.
Meta is the anchor comparison in the peer analysis. Meta grew revenue 16.1% year over year and trades at 9.7 times price to sales. Pinterest grows faster than Meta at 18% and trades at less than a third of Meta's revenue multiple. The valuation gap between Pinterest and Meta in one sentence is the entire bull case.
Snap is the more direct structural peer. Snap grew 13.9% and trades at 3.1 times PS. Pinterest is growing faster than Snap at a slight PS discount. On pure growth-adjusted price-to-sales metrics, Pinterest screens as the more compelling value within the pure-play social advertising category, with better gross margins and faster top-line growth.
Google enters the picture as a competitive threat in visual search and shopping discovery. Google Shopping is a massive, well-funded product with enormous data advantages, but Pinterest occupies a distinct mode of discovery: aspirational, future planning, emotionally driven browsing with high commercial intent but low immediate purchase urgency. That specific inventory is something Google has not effectively replicated despite years of trying.
The peer picture reinforces the discount. Pinterest trades below Snap, dramatically below Meta, and below where its own fundamental metrics suggest fair value. That gap closes eventually. Either the stock re-rates as the commerce pivot delivers, or the fundamentals deteriorate. Investors are being compensated to wait for that resolution.
Options activity around Pinterest's first billion-dollar revenue quarter generated moderate call interest. Traders were positioning for a positive print, but not with the aggressive call skew you see in high-momentum names. The billion-dollar milestone was widely anticipated given the Q4 trajectory, which meant part of the positive setup was already priced into the options market before the actual report.
Post-earnings, the question is whether the billion-dollar milestone acts as a re-rating catalyst or gets absorbed as priced in. The stock still trades 33% below the average analyst target. A gradual upward re-rating over the next 2 to 3 quarters seems more probable than a sharp immediate move. Momentum investors will want more evidence of the commerce pivot.
On the insider side, CEO Bill Reddy has executed sales under a pre-scheduled Rule 10b5-1 plan. These are programmatic transactions, not opportunistic selling around earnings. There are no red flags in the transaction record, but there are also no open market purchases from executives or directors at current prices, which is a contextual data point worth holding.
Institutional ownership is relatively high for a mid-cap social platform. Large generalist and growth funds hold meaningful positions. The risk is that institutions lose patience with the GAAP profitability timeline. A mid-cap name with concentrated ownership and no insider buying can see asymmetric downside if a major holder exits in a disappointing quarter.
Bottom line on Pinterest: first billion-dollar quarter, 79% gross margins, 31% FCF margins, 2.9 times PS. GAAP losses and Meta competition are real, but the valuation discount is substantial relative to fundamentals.
The commerce pivot is the watch item. Amazon and Instacart are the proof points. If lower funnel ads scale internationally over the next 4 quarters, the gap to analyst targets closes fast. Watch ARPU by geography as the leading indicator. I am Hudson, she is Lana, this is Charged Alpha.
Financial data and charts sourced from Financial Modeling Prep. Charged Alpha is for informational and educational purposes only. This is not investment advice. Always do your own research before making investment decisions. Thanks for listening to Charged Alpha. Subscribe and leave a review if this was useful. New episodes every earnings season. See you on the next one.
Ooh-wee-doo! That ticker tape starts dancing fast. A bull market thrill that's built to last. Dividends are ringing up the swing. Listen to that sweet ka-ching. It's a Wall Street swing. That fast-paced rhythm makes you sing. Yeah, the Wall Street swing.